Is a real estate crash on the horizon for Canada? Question. For the past few years, I've been doing a lot of research and I keep seeing this headline innumerable times. And there are many economists that are predicting that there is a real estate bubble in Canada and it will cause house prices to crash. So, with the Bank of Canada continually hiking interest rates, could that be the decline that some are predicting is on the horizon? There's mixed feelings amongst Canadians' top economists on this, and I'm going to go over two perspectives that I have continually keep seeing over and over again, and I'm curious as to your thoughts on this, and I would appreciate you to comment below. So some say the various factors that put upward pressure on house prices are immigration, which we all know is happening, and a lagging housing supply, which again, we all know is happening. And this will keep the crash at bay. Others are saying that it's a house of cards and a crash is inevitable. According to Eric Miller, president of Rideau Potomac Strategy Group, he states a major price correction is unlikely because the main factor is Canada is unable to meet the current housing supply to keep up with the demand, which would assist in keeping the prices relatively stable. I also sort of agree with that theory, but I guess the question really is, in my opinion, what is defined as a stable price in Canada, right? He also states that we may experience variations in price escalations, particularly as interest rates continue to rise. If they continue to rise, thoughts on that? Curious if you think they're going to go up. My personal opinion is we might see 2 more hikes. And then, of course, as we head into the election year of our fearless leader, we'll see them drop again because he has to save Canada with his unyielding, excellent performance of managing our country. Not sure how y'all feel about that. Anyhow, moving on, I digress. A second opinion I have on this is possibility that we truly don't have, and actually this is stated ad nauseum by everybody, we truly do not have the structural systems in place to bring new homes online quickly. So I want to remind you that when you see a condo being built, when you see the cranes in the air, it represents 80% of that unit already being paid for or purchased, sold, because those are the regulations in Canada. So when you see condos being built, that is not new housing that's coming into the market that's available 100%. That is already 80% purchased. Now, I can't attest to who is purchasing that. Are they Canadians? Are they investors? Our federal government, I will say, has done a job of penalizing outside investors for purchasing in Canada. So that has contributed to Canadians actually being able to purchase within our own country. Go figure. What a concept for that. So thirdly, I also want to say that it's been proven that over the last 30 years in real estate, obviously, it's been about the best investment you can really make in Canada. Reality is, we all need a place to live. So whether you own or rent, it doesn't matter. We all need a place to live. And I don't know about you, but the whole concept and maxim of you will own nothing and be happy, that doesn't fly with me, and it doesn't fly with a lot of the people that I know. Anyhow, I digress. Well, moving on, CMHC has cited that we need an additional 3.5 million homes by 2030 to increase affordability in this country as of right now. So 2030, 3.5 million homes. To put it into perspective, in this country, last year, Ontario only had 96,080 housing starts. That is a far cry from the 3.5 million homes that Canada has. And I will also remind you that below the Montreal parallel is 50% of the population in Canada, of which below that, GTA and lower, is the remainder of the population of Canada, 50% of that. So do the math. If you're in the GTA, I don't necessarily see our house prices going down because we are a far cry in one province from where the majority of the population lives of the required needs that we have for housing. So it is cited that we won't experience the same drop that the Greater Toronto Area saw of nearly 34% in 1989 and 1996 because of the gap between supply and demand. It was much narrower in those days. And the other thing I do want to say is they had more serviceable land back then. We don't necessarily have that land available to us now. So growth rates may slow, financial growth rates may slow, but that's not the same as a housing crash. So in conjunction with that, we have immigration pushing up prices. And according to Frank Clayton, a senior researcher at the Center for Urban Research and Land Development at Toronto University, immigration's constant pressure will continue to push prices upward. He indicates that Canada now leads the group of 7 in its population growth due to immigration, and the country poises to take in 485,000 permanent residents in 2024 alone. That doesn't attest to all the other immigration that's happening. So whenever there is growing demand and restrictions on supply and demand, you generally have higher prices. I think we all witnessed that during the C times where toilet paper went up and all of our goods that we needed went up. So what did people do during that time, actually, over those last 3 years with a surplus of cash, again, that our fearless leader was handing out to families that didn't necessarily need the money? They bought real estate. So CREA has reported the average home price in Canada in May was $816,720. That same home in the US was $487,300 US dollars, converts to approximately 643 Canadian. So when housing prices fell during the early 1990s, it was a time when interest rates were much higher to combat inflation, with the prime sitting at about 14% in 1990. And the resulting recession, we had 11% unemployment, which we do not have right now. And that resulted in Canadians having much less cash on hand to buy homes. So the situation right now is very different. This country currently has a lower unemployment rate than back then, and inflation is now sitting at 2.8 to 3%, and jobs are supposedly continually being created. So the prediction is that we're not going to see interest rates in double digits, which I really hope so, because that would be ridiculous. So on the flip side of all of this, Joseph Barbuto, director at Research of Economic Long Wave, foresees an eventual 30 to 50% collapse due to due to down wave, or the monetary wave, where the financial assets take on a life of their own. Since 1981, that ability to carry more and more leverage has increased because people's cash flow is limited in real terms. Cash flow has gone sideways, which causes a Ponzi finance because it's not sustainable. Barbuto states that once you finally get a reversal, which we started seeing last year, house prices have to fall and adjust to the rise in interest rates, which we are now and have been seeing. He states that a long wave cycle typically lasts 55 years, but the end of Bretton Woods' economic system in 1971, which allowed governments to become more indebted because of the values of currencies which were determined by market forces instead of being pegged to a specific value, has extended the length of this cycle. He also states that we are on the precipice of this globally, and cites from the book The Next Economic Disaster by Richard Vague. Many countries like Canada are in a credit bubble, and Canada's private debt to GDP ratio, which currently sits at 270%, while the US is at 217, where typically a private debt to GDP ratio, anything over 150%, will foretell an economic crisis. The year 2020 was a blow-off, and it's at a record level target. Japan in 1989 and the US in 1929, and we all know what happened after that. So not to be all doom and gloom, I'd love to hear your thoughts on this. I'd love to know what you think, where you think we will go. Regardless of any bubble, we still don't have enough housing. We still have a lot of immigration coming in, and people want to live somewhere. So thoughts, please comment below. Please be nice. Peace out. Love y'all. Happy Monday. Little heavy subject, but y'all know me, and it's what I love to talk about. Ciao for now.